Joining us now is John Augustine, Chief Investment Officer of Huntington Private Bank. John, always great to see you.
Great to see you, Melissa.
What do you think Friday was all about? And do you think today's market reaction is where the market should be?
Yeah, to us, Friday was about low volume trading and a new headline. And the new headline was not favorable. You've been reporting on it this morning. So those are the two things that caught our attention on Friday. Most of the people in the States were out and a bad headline.
So where are we in terms of where we go with the markets toward the end of the year with the sort of the cloud hanging over the markets from Omicron? There's a lot we don't know, and there's a lot that we will learn over the next few weeks in terms of the efficacy of the current vaccines and efficacy of the drugs in the pipeline that could possibly treat it.
Totally. Safety's first. So that's number one. And as everyone's been saying this year, the path of the virus dictates the path of the economy. So there's going to be much debate about that. But we see very positive headlines coming out with respect to Omicron so far today, as far as how it affects you and potential variants of it or death rates of it. Don't want to really say that, but down the future. So stocks are coming back to the large stocks, as Dom talked about earlier. And then it's coming back to all sectors now being up. It's really building strength as we move through the day, in our view. And that's the correct view, given the pace of the economy, given the pace of earnings.
Do you think that the path of the virus has been the predictor of the markets for, say, the past 6 months, or even I would go so far as to say a year, or has it been much more so the 10-year yield? And I guess I'm asking that question because in terms of the trajectory of the gains made in certain sectors, the 10-year yield could arguably be the more important driver of that.
Yes and no. So they seem to offset each other, just as they did on Friday. Stocks down, yields down. Then yields down, Nasdaq up. So there has been that play. And as Dom talked about earlier, with the large tech stocks benefiting from that. So they seem to alter each other or go side by side, lower yields, higher yields, et cetera. What we would say is that stocks were impacted by the Delta variant, really in August and September, almost through the beginning of October, before it became under control or known by the markets that it was going to be under control. This one, as you said, we don't know all the science yet, but stocks are taking a more optimistic view today. And 10 years up a little bit today.
Are you just staying the course at this point, John, through the end of the year? I mean, do you stay with big cap? Do you stay with big cap tech in particular? Do you go to financials?
So the equity team, our equity team's going more to a barbell. So they'll go to the cyclical, and then they'll stay with some defensive. So that's been the right approach. They've used that approach because we didn't know the path of the virus, and that's coming back again. Do we keep the stance of stocks over bonds? Yes, we keep that stance. Real yields are still too negative for us to be moving into. So we keep the stock stance, keep it mostly in the U.S., but we are keeping some small and mid caps because we think growth is pretty good next year.
All right. John, great to see you. Thank you.